Hello folks, let's take a quick look at the precious metals charts. We will start with gold in the daily time frame. I'm not displeased at gold's performance given everything that's going on. We've got the dollar that's relentlessly strong. We've got interest rates rising sharply. We're going to get inflation numbers tomorrow, CPI numbers. The equity markets dropped at the end of the day today. It's sounding like the inflation is going to come in hot in the morning. We'll find out soon enough. Anyway, with all of that going on, gold is holding up quite well, bumping along sideways along the 200-day moving average, basically. MACD is in bear mode, but on a buy signal. Energy's about mid-range. Silver is not doing as well as gold. Had a fairly strong down day today and not getting any strength in the overnight session so far. MACD in bear mode, still on a buy signal, but looks like we could get a sell signal unless silver turns higher at this point. Energy headed lower. Mining stocks, they followed the equity markets down today, currently getting support. That's the third median line extension of this Andrews pitchfork. And some people might say, well, why you still got that fork on your chart? It's like, well, I've got that fork on my chart because it's still working. This fork is accurately predicting price behavior. We can see it, resistance, resistance, support. So yes, this is the third median line extension. The fork's been on this chart for a long time. Part of it as well is there's not a better fork. There's no better fork to draw on this chart in this time frame right now. MACD is in bear mode, currently on a buy signal, but rolling over, energy very low. So mining stocks certainly not looking exciting at this point. They've got the headwinds of, lackluster action in the metals, and then everything else that's going on. Equity markets, not happy today. I did a video earlier where I looked at all of the currencies in the US dollar index. They're all tanking, they're all heading lower, which of course makes the dollar strong. This is the dollar in the monthly time frame. This is a high consolidation. Dollar's going to head higher. Dollar in the weekly time frame, same thing. Dollar's headed higher. Daily, we can see we got a big strong move in the dollar today, and it's continuing in the overnight session. Dollar's headed higher. We can see we got a green bar in the MACD histogram, which means we got a new buy signal in the US dollar. Energy is very elevated. US dollar's headed higher. Interest rates, same thing. This is the yield. Interest rates headed higher. This is true across the board. Doesn't matter which interest rate you want to look at. 1 year, 2 year, 5 year, 10 year, 30 year, they're all heading higher. Interest rates are heading higher. As I pointed out in my last video, the US Fed is not in control of interest rates, regardless of what they'd like you to believe. Interest rates are headed higher, not at their choosing. It's the market moving interest rates higher, which of course means that bonds are tanking. If you're long, if you're invested in bonds, rising yields are not a good thing. They're hurting your bonds, as you're well aware. This is a 10-year note yield in the daily time frame. Again, just relentless moves higher. Moving averages are in bullish alignment, which means the 20-day is above the 50-day, 50 days above the 200. MACD in bull mode on a buy signal. Energy very elevated. Interest rates are headed higher. This chart, this is the 1-year bill, in the yield on the 1-year bill in the monthly time frame. I like this chart because of these vertical moves. It's like, in hindsight, we know it's like, okay, that was the global financial crisis. This was the big scary plunge in March of 20. We don't know yet, but we can look at this chart and say, well, holy cow, something's going on, and it ain't good. This is not good. When this chart is moving vertically, good things are not happening in the economy. As I pointed out in my last video, the global economy is tanking, folks. I mean, believe what you want to. I'm going to believe that the global economy is tanking because that's what the charts show me. So anyway, Let's continue. This is the SPX. We can see big down move today. What do we get? 2.3% to the downside. Wasn't sure what was going to happen. We've had this sideways consolidation. Basically, equity markets stalled. And of course, they were dealing with, this is a horizontal support resistance zone, resistance along this first median line extension of this shift pitchfork. Not terribly surprising that they rolled over. Of course, the bulls were hoping they'd head higher from there. MACD in bear mode, suggesting that the primary trend is down. Energy is elevated but rolling over. Moving averages in bearish alignment. Dow, very similar. We got almost 2%, so 1.9% move to the downside today. Potentially at a support level, we've got this horizontal support resistance level, 20-day moving average, so potential support there. MACD in bear mode and rolling over, energy elevated but heading lower. The expectation is that the inflation numbers are going to come in higher than expected in the morning, which will be a major headwind for the equity markets tomorrow. We'll see what they do. NASDAQ looks very similar to the Dow. Resistance along the first median line extension of this shift pitchfork, rolling over, potential support at the 20-day, MACD in bear mode, rolling over, energy high, but heading lower. We look at this economic calendar in the morning. We've got consumer price index, a couple of readings on that, consumer sentiment, inflation expectations. So number of inflation reads tomorrow. Probably be a tough day for the equities tomorrow. We don't need these numbers. Interesting when the talking heads come out tomorrow and share them with us. All we need to know about inflation, folks, is this one chart. Oh, and sorry I didn't label it. This is the price of a gallon of diesel in the monthly time frame, $5.70. Our economy and the global economy runs on diesel fuel. Nothing happens without diesel fuel. Groceries don't arrive at the grocery store without diesel. Goods don't arrive at Walmart or any other box store without diesel for the trains. Nothing arrives at the ports in Long Beach or any other port you want to talk about without diesel for the cargo ships. The world's economy runs on diesel fuel. So we don't need the Fed to tell us what inflation is doing. All we need to do is look at a chart of diesel and we can say, well, prices are going up because everything is affected by the price of diesel fuel. That's all I've got for charts tonight. Wish I had better information to share with you folks. We'll see what happens tomorrow. Have a good one.